Hello, my name is Benjamin Hewlett and welcome to our channel, Death and Taxes. Today we're talking about the CARES Act, and specifically we're talking about the PPP, or commonly known as the Payroll Protection Program. Now, the Payroll Protection Program is huge right now. There's actually one of my most favorite news articles was Wells Fargo did $10 billion in payroll protection loans in one day, the first day that it opened, which was on the 3rd of April. So that was the very first day that the payroll protection program went into effect. And it was for basically all companies that had legitimate payroll documents, meaning things like 941s, 940s, and W3s, W2s. So basically all of the forms that you fill out for payroll. Now, today, which is April 10th, the day that we're filming, is the first day for basically anybody that doesn't have those payroll documents. Now, if you're watching this, then you're most likely interested in getting one of these payroll protection program loans. Now, these loans are really important for people who are struggling during this coronavirus, and they can be applied for through an SBA approved bank. Now, you got to determine what bank that is for you, and so you'll want to go to the bank and ask for the requirements. But what you need to basically have on hand is, if you apply with a W-2 or basically W-2 documents like 941s and 940s, have those ready, as well as anything that substantiates your payroll and your earnings during the last year or the last 12 months. If you don't have payroll documents that are available, such as 940s and 941s and W-2s, then you need to substantiate your income through tax returns and or business returns. So you will have to provide potentially K-1s from your business returns and your personal return. So have that ready. Call your SBA loan officer that you know or your local bank to see if they are participating in the program and apply. Now, what happens is that you get 2.5 times your monthly income or potentially monthly payroll as a loan, and that loan will be forgiven. So for instance, if I am a little bit larger employer that has payroll and I have employees, then if let's just hypothetically say that my payroll was $100,000 on average per month, then that $100,000, you multiply that by 2.5, and that gives you the $250,000. Now I can go apply for a payroll protection program loan through the SBA, and if I'm approved, then they have 10 days to get me that money. And if I use it for basically payroll costs and rent and utilities and mortgage payments, then it can be forgiven at a future date. Now, that date will be determined by when you close and your SBA approved lender, but basically it can be forgiven. So it's potentially free money. Now, you want to be careful though, because there's a lot of strings attached, and one of the things that you need to recognize is that one of the stipulations, or one of the things that they've said, is that you need to make sure that most of it is used for payroll cost. Now, one of the figures that they've said is 75%. So make sure that most of what you're using it for is payroll costs if you want it to be forgiven. So one of the amazing things about this is that the interest rate is only 1%. And you can carry this loan for up to 2 years. So that is a really cheap loan. And so it can benefit you if potentially you need it for other sources, not just payroll, then you can carry that loan at only 1%. So that would be really honestly awesome for those people. So the other 25%, if you use 75% for payroll purposes and then 25% for the other piece, it can also be forgiven up to that 25%. Now, there is some interesting language inside of the CARES Act that says that there could be more, but don't take your chance. So don't take the chance of it not being forgiven if you want it to all be forgiven. Only use up to 25% for mortgage, utilities, utility payments, or rent payments. So that it's all can be forgiven. If you are self-employed, then the understanding is that you would take your self-employment income, and let's say that's either on a Schedule C on your personal, or let's say you're a partner in a partnership and you have self-employed income, you would divide that by 12 and then multiply that by 2.5, and that's the amount of loan that you could get as the Payroll Protection Program. And that, again, potentially could be forgiven. So talk to your SBA loan officer for additional details. These loans can be extremely beneficial, especially for those in need. Now, one thing that you need to know, and the reason why we're trying to get these videos out really quickly before we have necessarily all of the information, is that there's going to be potentially a funding cap. Now, that funding cap has been established at $349 billion. Now, that may seem like a lot of money. However, I've talked to a few banks around just our little local town, and one of the banks did $400 million. We talked about Wells Fargo. They did $10 billion in one day. So the cap is going to be reached extremely quickly. So you need to make sure that you get your loan application in very quickly so that you can potentially take advantage of this beneficial program. Just a couple things to note. When you're trying to come up with the average monthly payroll, don't use more than 100 grand on an annual basis for each employee, because there's a cap there. So just make sure that you talk to an SBA loan officer when you're trying to calculate that loan amount, and they will guide you through that. But that is one thing to know. The other thing is that there is a 6-month deferral on the loan payments if you apply for these loans. So it'll help you get you back on your feet, and then you can start making those payments in 6 months. Thanks again for watching Death and Taxes. My name is Benjamin Hewlett. We sure appreciate you watching. Give us a like, give us a subscribe. See you next time.
This video has been brought to you by QuickTax Pro. If you want a tax professional like myself to prepare your taxes at a fraction of the cost and time, download QuickTax Pro. See the link in the description below.